What's good, YouTube? It's your boy back again with another video, and let's do this market breakdown for the forex majors: Euro USD, USD JPY, GBP USD, and USD CHF. So today is the 12th of January 2021. It's a Tuesday. The markets have been moving. Let's get straight right into it. Last time I did a breakdown was during the weekend, looking at levels and zones that might be of interest in the weeks to come, and it's only been Tuesday and a lot of those zones have been met already. So let's get straight to it. Now the first pair on our list is Euro USD. Now if you remember, in the previous breakdown I took you through the movement from the lows over here all the way to the highs, and what I said was as you can see in the beginning, the impulses were pretty steep, the inclines were steep, you could see by the momentum, and then momentum started to sort of die off. You could see the change in the incline, and then finally around here you could basically see that momentum was tapering off. So it was very aggressive in the beginning. There was a lot of energy behind it, and then it started to lose steam, and then it started to taper off. So these are typical signs that you would see in a market cycle, going from the lows to the highs and then back to the lows. So when I saw this, I said there's a potential that we could see bearishness, a retracement. I mean, if you go to the monthly, it's you could see that we've had two very strong bullish months of bullish momentum. So it would be it wouldn't be unreasonable to expect a healthy retracement. So this might be the start of a little retracement back. Now this retracement, do we know how far the retracement will go? Will it go to for instance, like, let's say you draw a fib from the bottom to the top? Would it be a 38% retracement? Would it be a 23.6? Would it be a 50%, 61.8, 78.6, 100% retracement? We never know, But what we do know is after a bullish move, it is expected to have a sort of retracement for profit takers, as well as people who feel that the market is overbought and they feel like it's too expensive and now it's the time to short. Many reasons why people may want to short, but the fact is market does not move in a straight line. So knowing that we've had two bullish months, very strong candles, having a retracement now is not something to freak out about, even though our bias is still bullish. It's to be expected. And now, as you can see, this zone of ours, the price is closed way beyond it, so we can definitely delete this zone. So the next zone was obviously this zone, but this zone of ours had already been visited, so of course we're not going to look for a trade setup opportunity. As you can see, price came into the zone and the zone acted a little bit of support, it bounced a little bit, and now it's back in the zone and it's just hanging in there. So now ours is just to wait. So because this movement down was impulsive, now I guess we can be able to draw our new zone. So what do we need in order to draw a zone? We need two things. We need an impulsive move from the level, and also we need a break of a swing low. And as you can see, this swing low was broken, and before this swing low was actually broken with this move, there was a swing low over here. Let me just spread the charts out so you can see a bit more clearly. For those who do not quite know, I made videos about swing lows and zones, so if you're interested, you can just go into, I have a playlist, it's called the technical series, where I go down all the elements of my strategy. So this right here was a swing, and it was broken with this move right here, even though it wicked back up, but it did. Price for a period of time was trading below that swing low, so that swing low was broken. So and then it went back, and then it came, and then continued, and then it continued breaking all these lows. So we would identify our zone and draw the zone from that level. So this the candle that led to this would be this would be the zone right here, perfectly right here, and then we just draw that and then extend it into the future. Now we do have zones above, some more zones that we have identified that price could go to. There was previous supply and demand in those areas, but this one is a fresh new zone right now, that was created right before this initial bearish move. So this zone would be a very strong zone for us, and we would be very interested in the first return to this zone to potentially look for shorts, you know. So now here we are at this zone. This zone's already been visited, so we're not looking to go long because we already took a trade here. But if price does come back here, we will look for shorts, even though our bias is bullish, because right now there's an impulsive move down, has broken major swings, even minor swings as well as major swings. So this could be the start of a potential retracement, and the retracement on the 4-hour, sorry, the retracement on the monthly, you know, a small retracement on the monthly would look like a straight up bear trend on the 4-hour. So this could be the beginning of that bear trend, you know. As you can see, price has just been going up and up and up and up and up and up for weeks, and finally now we have this indication that okay, we might be shifting, you know. And if you also take into the consideration the inclines, the way the inclines were kind of tapering out, putting all these together, drawing out our zones, knowing our monthly bias, and just taking the setups that are presented to us, you know, as long as you stick to your strategy, you know, everything will be good. So that's that about Euro USD. Right now we're just going to be stay on our hands. We're just going to sit on our hands and wait for the trade to, you know, show itself. And when it does come to this zone, we'll use any one of our 3 entry types that I have made a video about as well to enter the trade and then capitalize on potential movements forward. That's it. Now let's go to our next pair, which is GBP USD. GBP USD, oh, what a beautiful scenario. Now if you remember last breakdown, I drew this zone and I told you that they're consolidating the price right now, and it's was it a coincidence that they're consolidating right above a valid zone? I was like, they're probably trying to engineer liquidity, make people place buy stops and sell stops just beyond the zone, beyond that consolidation box, and then later on they're going to come down and then they're going to take one side out and they're going to take the other side out. So we were expecting them to do this, and they did exactly that. They came right in here and then boom, look at that, you know, look at that, look at the reaction. Basically it came right into the zone, took out all the people who had sell stops here, you know, trying to get in on the buy, and has liquidated them. Now it's come into the zone. If you were using a 50% entry, you would have been in right now. If you entered here also, you would have been in profit right now. So yeah, basically it did exactly what we anticipated it to do. Bear in mind though, there is another zone here, so this zone could fail and it could come. I wouldn't be surprised for it to come here, but regardless, entries here are valid. And if you do end up losing because the price does go down lower, that's okay. You lost 1%. Enter here, and then potentially this one would be the one that would work out, and then, you know, you would definitely more than make up your loss. You know, never be afraid to take a loss. You know, just follow your strategy as long as you have faith in your strategy. So yeah, this is beautiful right now. You know, I like what's going on here. You know, this is nice. You know, you can, you know, just maintain and then try to look for buying opportunity. If you're already in this trade, you know, congratulations to you. If you're not, you know, well, you missed it, because we only trade the first returns to the zone. But if price does come to here, you can be ready and then try to look for an entry here if price does continue down south, you know, because even though this nice very bullish engulfing candle on the 4-hour does look promising, these small candles aren't looking too promising. So there could be a possibility that price might want to go a bit lower before it continues higher. So just bear that in mind, and don't be surprised if it does wipe out and you do get taken out. It's okay, it's part of the game. You know, there's no 100% strategy. So let's go to our next pair, which is USD JPY. USD JPY, beautiful. If you remember last breakdown, I also said that this zone was too small and I would be uncomfortable taking. Price was around here when I did the previous breakdown, and I said this zone was too small for me to take a trade on. It's like a 4-pip zone. I was like, no way am I taking a trade off of this zone, but I'll leave it there just to know that it may act as some sort of resistance. And as you can see, price has broken above the zone and has cleared the zone. What I did say though last week during the week breakdown was that I would prefer price to come up to any of these zones, and these zones I would be interested in taking shorts. And you can see, as you can see right now, price has come right below this zone and has not tapped it. So what we can do is we can remove this zone since that zone has been neutralized, and now we can wait for any tap into any one of these zones. Here we can look for trading opportunities to go short. The zones are tight but not too tight, so if you want, you could take 50%. You can take right at the at the base of the zone, and you can put your stops up just above the zone, or since these two zones are very close to each other, you could put your stop all the way up here just in case maybe a wick tries to take advantage of this zone. Putting these two zones, both of them together, it's around 30 something pips, so it's not that big actually. You could to be on the safe side, you could put your stop above both of the zones. That way you have a higher possibility of staying in the trade, and then capitalizing on the move downwards. So that's that about that. There is a zone here that we can spot, because as you can see, there was a swing that was broken here impulsively with the move, so we can definitely draw out a new zone here, bullish zone. So we know that if price does come back down, that could act as some sort of resistance, or it could act as some sort of level for profit taking in case we are short from up here. I haven't made a video on profit taking yet, but I will make it in the near future, and I add it to the technical series and explain to you how exactly it is I set my profit targets, and the rationale behind it. But yeah, basically one way for you to do that is zone to zone. Just using market structure. So if, for instance, you were in a trade up here and you're not sure where to exit, you could be like, okay, since this zone might act as some sort of support, I'll use that as a profit target, knowing that price may experience some difficulties here. That could be one method that you could use. So yeah, that's what we have on USD JPY. Bias from the monthly is still bearish, but as you can see, we're having some sort of retracement now, just like Euro USD was doing. So yeah, this is looking good. Now for our last pair, which is USD CHF, here we are. We're smack dab in the middle of this zone. We haven't quite closed above the zone, so the zone hasn't been completely annihilated yet, but it's looking to be annihilated. And the next zone we have above this would be the zone over here and the zone over here. So price is looking pretty decent, I would say. We do have a swing high over here that was broken impulsively, so we can draw a new zone, a potential bullish zone that we could keep an eye out for price coming back, and then using this as support to bounce up. So from the looks of it, this zone is potentially going to be wiped out, so we would remove this as soon, and then price is probably going to go higher to one of these zones above. This is a pretty tight zone. Let's see how big the zone is. It's 16 pips. Okay, so it's not that tight. It's okay. 15-16 pip zone is good. So that could be one very interesting place to look for trade ideas to the downside, or the one above it over here, if the retracement does choose to go a lot deeper. None of these zones have been tested, so they're all fresh. So a return back to any one of them would be welcome for high probability trades, especially because the monthly is in a bearish trend as well as USD JPY, and now we're just experiencing a slight retracement, as you can see. So that's cool. And as you can see, this swing that was broken, the retracement, if the retracement comes back to the swing, that would kind of coincide with a break and retest, typical market structure, typical market structure, make a level, go up, come down, break that level, price comes back, does the retest right at that level, people look for shorts and then go in. So this is something that similar to that. So based on that, we could assume that there would be high probability of the trade working out in our favor once it comes to this level. As you can see, here's the swing. That red line is indication of where that swing was, and there's a zone right there, the 16 pip 15-16 pip zone. So that could be something interesting for us to look at. And yeah, that's that about the breakdown right now. Thank you very much, and then stay tuned for the next breakdown in probably a few days. Peace.